Hey traders, in this video we're going to talk about what is a trailing stop. Stay tuned. A very warm welcome to you traders. Now we're going to talk about what a trailing stop is, how we can use it in our trading, how we can mitigate our risk, the best scenario for it, and run through an example and see how it would all work, and then we'll stick it into a platform and see how we can put it all in and so it all fits together and how we execute it actually for real. Right, so I've got in front of you here a daily chart of the DAX, and this is every candle is representing a day, and let's just say for argument's sake for this video that we wanted to go long here. We think it's long, we think it's going to keep on pushing, we want to ride this train up to this higher side. And by the way, it's not analysis, just purely for this example here. Alright, so we're currently at 12,695. And let's say we're swing trading this, we're going to give ourselves a little bit more room. We're going to say, okay, we're going to take a long here at whatever price we get filled at by the time we get rolling. And we're going to put our stop loss. We want to give ourselves a little bit of room, right? We don't want to go crazy. We're about 12,700. Let's give ourselves a 200 point stop, right? That gives ourselves a little bit of wiggle room. We're looking for a much further thing. We're looking for a push through highs, for example, looking for maybe a tag of 13,000 and beyond. Whatever our analysis may be, doesn't really matter. Let's just put this in kind of the framework that we would do if we were running a trading stop. So there's a couple of ways that trading stops work. Now, one of the better ways of doing it is to have a kind of ratchet system, which is where if you imagine the price pushes up in your favor, as it comes in your favor and goes through a certain level, the price then ratchets up. The stop loss ratchets up as the price moves on. The stop loss and it goes to the next level, the stop then moves up again. So rather than it being kind of going with every single tick, as the price moves a certain level, let's say 50 points in your favor, the stop will then move up 50 points. As it moves around, moves up 50 points in your favor, the stop will move up 50 points. So the advantage of that, guys, is that you can decide what you think is the noise level of your market you're trading. Let's say it is 50 points. So if it goes up and down within that, you're still protected by, in terms of you've got your risk capped, but you're not kind of dragging it right up with it on every single tick. It's not kind of going up every single tick the market goes up. It's giving it a little bit of wiggle room until it kind of gets past that noise level, if you like. So that's a much nicer, cleaner way of having a trading stop. So let's look at this example. Let's move on to the InterTrader platform. Let's stick this trade in and let's see exactly how it would work. Alright guys, hopefully you can see that. Let me try and squash this up a little bit more so you can see what's going on. Right, so we're going to trade the DAX. We're going to use that same example, and this happens to be one of the popular markets that happen to have up here. German 30 rolling daily, that's what it's called on InterTrader. Let's go to the trade button, fire the trade button. Let's have a look at the trade ticket and see exactly what we do. So position size, let's say we're going £5 a point. We're on a spread bet platform here, could be a CFD, whatever it may be. We're going to buy. We're going to have a stop level, and we've already decided, what did we say? I think it was 200 points away, right? So 200 points away. It's going to give us about £1,000 worth of risk. Fine, we accept that. We look and see the approximate level it's going to be. 12,496, was that where we were going to be? About where we're going to be. Perfect, happy with that. So it's just under that 12,500 level. Okay, we want to have a trading stop. Right, so the trading stop, we tick the button here. Now we put in what's called our trading step. And as we mentioned, we want to have it ratchet up every 50 ticks. So in other words, as the price starts off now, let's say we're at 12,700. The price goes to 12,710, 20, 30, anywhere up to 12,750. Our stop is going to be exactly the same point. It's going to be at 12,497, or if we execute at 12,700, it's going to be 200 points away at 12,500. Okay. As we go past that 50 points move in our favor, all of a sudden our stop is going to come up by 50 points. So if we go to 12,750 through that level, then our stop is going to move up by 50 points to 12,550. So we're going to move it up, move it up, move it up. Now we can set that trailing step to whatever we want it, and again, that's kind of the good thing as a trader. We're trying to push that into the noise area, because we don't want to. The point of a stop is we want to pull the gains up, ratchet up the gains as it goes in our favor, but not too tight that we if we get a real kind of explosion to the upside that just kind of comes back to the mean, we don't want to get stopped out on that. We still want to give it some room. So that's the point of the ratchet system in the trading step, is that width is the noise. If we say to ourselves, okay, 50 points allows for a little bit of noise, a 30-point spike to come back, but it's only going to move the price up if it truly kind of breaks in our favor. So it's going to step as the price goes up. Now obviously the price goes up to 750, 800, 850, 900, then our stop is going to come back up by 200 points in that time. So it only steps every 50-point increment. Again, we can set that at what we like, and that will only change as we come in. Either we cancel the stop, we amend the stop, we close the position, whatever it may be. So let's stick this order through now. We're buy, we're doing £5 a point on the spread betting platform. We're going to go market about the 12,700 level, 200 point stop with a trading stop ticked and a trading step of 50. We're in. So that goes in, that's our trade, that's entered, that's going to ratchet us up, and let's see exactly what that would do. Let's go back to the chart here. Can I squeeze it in so we can see? Just about. So as it moves up, chug, 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 750, the price will then move up by, oops, let me get my pen out, guys, rather than drawing on it. It's going to move up by 50 points. And then we're going to move up by 50 points, and 50 points, 50 points, 50 points, 50 points. You can see how it works. I think you get the idea. It's a really useful tool for getting on the end of trends without being too aggressive with that tightening, because you don't want to, as the trends kind of accelerate, you don't really want to be tightening your stop up. And if you do, then fine, you can adjust the step and adjust kind of where you come out as you do that. But generally, you want to allow it a bit of noise, allow the zigzag to occur, if you like, of the trend, but just be kind of there, just behind it, in case the whole thing reverses. So that's a trading stop, guys. Hope you enjoyed the video. Take care, good trading, see you in the next one. Bye bye.